Whoa, we've got a divergence here that says the market could drop significantly. Hey everybody, Courtney Smith here with our Wall Street winners. And what we see here is that the stock market has rallied dramatically. It's come down a bit lately. But the green line, which is the relative strength index, which measures momentum, is not making new highs. Momentum leads prices. And the momentum is weak, so prices are going to be weak. Yeah, it's September 21st and time for your weekly dose of Wall Street winners and your weekly dose of this incredible disclaimer. All right. Now, we've also got another significant change here as well. On Friday, we had a mixed bag, but generally negative. Let's break this down in detail. First of all, we made a lower low on Friday. Now that follows a a lower high on Wednesday. So we're now making lower lows, lower highs. By definition, that's a bear market. Now it's not a major bear market yet. It's a mini bear market, but it's a bear market nonetheless. The bullish news is that we closed in the middle of the trading bar, not near the low, and also the purple predictor is a bit bullish. So it was bearish, but not super bearish. Nonetheless, price action is the most important thing you can look at. Dow Jones did not break to a new low. Very interesting. NASDAQ, though, did break to a new low, although once again closed in the middle of the session, and the purple predictor was bullish. So we have to watch. I'd wait one more day to get really conclusively bearish. Another down day, particularly if we close on the low, because this could be a bear trap where it gets everybody short and then it rebounds up. But we just need one day to find that out. So we'll take a very close look on Monday. All right, no seasonal trades at all. Nothing is following the normal seasonal pattern. All right, now, I do think we are going to head lower. This is a week which is one of the weakest seasonal periods of the year. And I think that the election is getting closer and closer to being at the center of attention. Even if we follow the sitting president running, that means we're going to be chopping sideways. The death of Justice Ginsburg is going to roil the markets because it's going to roil the politics. And politics will be more important than economics over the next 2 months, particularly in the month of October. And we're almost to the month of October. Yield curve, steady, nothing to say there. Asset allocation, a little bit weak, nothing to say there. This is the one that really surprises me as we continue to see the market want more risk. You see, our risk indicator is a unique indicator which tells us whether the market wants to have risk or not risk, whether it wants to be aggressive or passive. And this is telling us that they want to be riskier. And it surprises me given the market's been down. Usually they hunker down when the market's down. But now they're saying, no, let's swing for the fences, even though we got two strikes against us. Global shares, very, very stable. Okay, now let me stop here at bonds. I'm becoming increasingly bearish of the bonds. I think we're going to see a money flow out of the bonds, and we're going to see interest rates move higher. And look at that purple predictor. It looks pretty bad. It's telling us that the smart money are selling bonds. Bond key factors, all of them tell us we should see higher interest rates. The dollar. Now, the dollar is heavily weighted towards the euro. And so this is almost a chart of the euro versus the dollar. But the key here is that this is very stable. But against the yen, the dollar moved sharply lower. So we're starting to see some changes in the various currencies at this point. But right now, the dollar in total is stable. Now, if the dollar is stable, that tells us that gold is going to be stable. But I think we're about to break out here as well. What we have here is what's called a pennant formation because it's shaped like a pennant, you know, the type of flag, the triangular flag. And we have yet to break out of the pennant formation. Now, typically pennants they break out in the direction of the previous trend. Well, the previous trend was clearly higher, so that would suggest that it's likely that it's going to break to the upside. And we're right now just under the downward slanting trend line, which tells me, or which suggests, I should say, that we're going to break out probably this week to the upside. Now, the other thing is look at the volume down below. You have to have volume confirm the pattern, and we're definitely seeing declining volume as we go through the pattern, which is exactly what you're looking for when you use classical chart analysis. I know that 98% of classical chartists forget this very important fact, and that's why they're basically losers. But you're here watching Wall Street Winners, and you want to know what's really going on, and that's what's really going on here in the gold market. So look for a pop to the upside here probably this week. Gold key indicators. So the top one's pretty flat. The middle one over the last week turned more bullish, but it's still under the old highs. And the bottom one, I told you about the yen. That's what the bottom one is. It is exploding to the upside. So let's count it as maybe 1.5 bullish and 1.5 neutral. But still, I think what's going to happen is this coming week or maybe the week after, these are all going to be bullish. All right, crude oil starting to pop up from last week. Last week, we had news in the middle of the week that they had been expecting an increase of 1.4 million barrels of crude oil, and they got a drop of 9.5 million, showing that the supply is actually tighter than they expected. So look for us to rally back up to the 42 to 44 area in crude oil. Bitcoin also rallied here, making it look a little bit better. Purple predictor is pretty much no big deal there. We're right in the middle of the range, so I don't want to do a trade here, but we are starting to see a little bit more bullish price action. All right, freebies, thank you very much. Fully paid up members, hold on for just a second.